Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. An indecisive spinning top yesterday, but it could also be seen as a bullish harami. What was interesting about it was how last Friday's actions had penetrated the flatlining short-medium moving average, currently at 108.82, but did not close below it. And then yesterday's dipped and used the short-medium moving average as the base for the action for yesterday. Above, we now have, again, as resistance, the 50% Fibonacci line of the January 2021 to September 2022 move at 109.44. Beyond this line, in the sand, is a congestion from late April and early May from this 50% Fibonacci line up to the interesting and influential neckline of the July 2017 to November 2018 move, currently at 110.88. And that's highlighted in dark blue on my daily chart. This neckline capped the market in late April and May and allowed the construction of the mid-March to date bull channel in the first place. Meanwhile, further down, we have the ever so slowly rising medium moving average, currently 108.13. Overall, we are still within the March to date bull channel, currently 106.73 to 111.43, which is highlighted in bright red on my daily chart. Now, so far today, a move higher up towards testing the 50% Fibonacci line, but stopping short of it so far. Cable, aka sterling against the US dollar. An indecisive doji cross yesterday as the market for a second consecutive session tested down unsuccessfully to the interesting 50% Fibonacci line of the June 2016 to September 22 move at 126.99, plus just underneath the September 2020 low at 126.72. These original resistances that have now turned into supports had kept the market back in early to mid-May, so they appear significant. Meanwhile, above, we have the overhead congestion combination made up from the November 2020 low at 128.52, plus the upper bull channel line, currently 128.80, and a powerful looking July 2021 to date optimized downtrend, which you can see angling down in dark blue on my daily chart, and that's currently at 128.96. These three resistances reach their narrowest and most powerful point in the middle to end of this week. So if there is to be an attempt higher, then it would need to be a really good attempt, or else wait until after this week, as that is when the combination of forces overhead will have reached their zenith. So far today, a small dip lower to test the 50% Fibonacci line, but seemingly recoiling back up away right now towards the lesser Fibonacci line at 127.72. Euro sterling. A quite long-legged, well, in relative terms, a quite long-legged, indecisive spinning top yesterday. The tongue and tail of the small main body were long enough that it dipped down to the support 85.45. Overall, this market is a contradiction in many, many ways. You see, we had a weekly key reversal up last week, all fine and good, but then today we had a dead cross, a lagging indicator of the medium moving average, currently at 87.46, down through the long moving average, currently 87.46 as well. And that is a bearish indicator. Schizophrenic behavior such as this leads to where we have an indecisive top, such as we've had yesterday. But, and here's an important but yesterday's action can also be seen as a bullish harami as well. This is all in the shadow of the action seen over the past 2 and a bit weeks of approaching and testing the significant November last year low at 85.45. This happened yesterday. As I said last week, and it applies this week, and I quote, "This indecisive spinning top means that the search lower may not be over," end of quote. Meanwhile, looking above for a moment, we have the April 2020 low at 86.69 and the April 2021 high at 87.19. And in between, an area of congestion that we saw being built up as a rectangle pattern and halfway hesitation back in May. Now, so far today, a test lower and then higher, though we are still within yesterday's range. US dollar against the Indian rupee. An indecisive spinning top yesterday, but also a possible day 2 in a 2-day homing pigeon pattern. This pattern is traditionally seen as a bullish reversal pattern. However, data indicates it acts as a bearish continuation pattern close to 6 out of 10 times. It'll be interesting to see if the market follows tradition or the data on this one. Last week, I started to have a suspicion that the market might be building up a congestion area around where we are, roughly between 81.90 to 82 even. We had a lot of closes around this area and a few highs and lows over recent weeks. So I thought at the time there might be something to this idea. Well, nothing that's happened has dissuaded me from that idea, and it's actually growing more on me. I suggest paying close attention to the 81.90 to 82 even area. I know I will. In the meantime, we have overhead the slowly rising long moving average, currently 82.13. Then the flatlining short medium moving average, currently 82.17. And above that, the slowly dipping medium moving average, currently 82.25. Looking below, we have an early May piece of closing based congestion between approximately 81.65 to 81.80. Overall, there seems to now be a hesitation period after the pullback from testing the overhead broken since seemingly repaired upper time, currently at 82.49, of the October 2022 to January 2023 mildly bearish shift pitchfork, and that's highlighted in dark green on my daily chart. Now, separate to all this, another recent feature remains the recent bow tie formation of the short moving average, currently 82.16, the short medium moving average, and the medium moving average. This triple crossover pattern sets up the opportunity for a move higher, as the moving averages went in and out of the bow tie in the right order and were mainly pointing higher. Theory indicates that between 20 to 25 sessions after the crossover, we may see a move in the direction of the bow tie as a result. Thus, we are right in it today, though coming to an end as it is between the 20th to the 27th of June, ideally. So look out for any potential moves, though so far it's been quite disappointing. We also have a possible new pattern, an April to date potential roof pattern, or sometimes known as a half diamond, highlighted in bright red on my daily chart. It's not ideal as a pattern, but it's still there. Finally, we have the ascending triangle formed between January and March, highlighted in dark blue. The market continues to have difficulties in interpreting this pattern. Now, so far today, a higher open followed by a dip lower down to yesterday's action, followed by a resurgence back up, such that we are back to where we started, and looking a little bit like a dragonfly doji right now. US dollar against the Brazilian real. A bearish double yesterday with the second lowest low in recent times and also the second lowest close as well. Additionally, it was a close back below the 50% Fibonacci line of the October 2018 to May 2020 move at 477.54, and potentially the start of a fresh move below and away from the breached lower bear channel line, currently at 481.40, highlighted in bright red on my daily chart of the November 2022 to date bear channel. This breached trend line had acted as a cap on the market in one way or another last week and the week before. As I've already said, much more of this behavior, I'll become obliged to unhighlight the bear channel. Now, below the market, we now have support at the lesser Fibonacci line at 472.92 and the May 2022 low at 468.98 before we see the lower time, currently 462.66, highlighted in dark blue on my daily chart, of the broken but seemingly repaired late July to late September 2022 bearish shift pitchfork. This pitchfork is important, as it has showed the bearish angle of attack way before the bear channel was created. I will continue to watch the action around the bear channel with interest. Now, sitting over all of this is still the shadow of the monthly key reversal down we saw in January. US dollar against the Mexican peso. A second lower indecisive spinning top yesterday, and thus also a second bearish black crow. The market is still within, if only just, the previously breached September 2022 to date bear channel line. Currently, the bear channel is between 1709.25 and 1832.15. Below, we have a mess of supports made up from the core band of support between approximately 1703.90 down to 1701.35, which has as its chief constituent the April 2016 low at 1703.89. Additionally, a little further down, we have the middle time, currently at 1691.35 of the December 22 to March 23 bearish Andrews pitchfork, which is highlighted in bright red on my daily chart. This middle time had earlier supplemented at a sharper bearish angle of attack, the breached bear channel. We also have in dark green a March to date descending wedge pattern, currently 1689.65 to 1737.70. The lower trend line for this is just below the middle time. What all this does is show how this market is getting squeezed tighter and tighter between supports and resistances, and I have a strong suspicion something's going to give way in a not too distant future. So far today, well, a test lower down to the March 2016 low at 709.25, as well as the breached lower bear channel line. But so far it is a small action and not pushing through those supports so far.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.